Talk about today's dollars and inflationary dollars. You earned 16 cents back then carrying your fucking fossil.
Money isn't the root of all evil, the fucking lack of it is.
Not money, the lack of understanding money.
When I put that into emphasis, when I realised that psychological effect and how it hit our family, I FTB all the fucking way.
You are now watching the Money Mentor podcast
With Graham Home.
Graham Home.
Welcome back to the Wilson Weekly, where property data meets real talk and where Dr. Andrew Wilson somehow makes clearance rates sound like the latest Netflix drama. I'm Rachael Howlett, your finance strategist, translating market chaos into mortgage moves you can actually use. Today, we're diving into rents easing, regions roaring, and auctions acting like they've had one too many espressos. Buckle up because the spring selling season is already throwing us some plot twist stock.
Yes, we're all excited, of course. It is spring. It's a little warmer. I'm actually up on the Sunshine Coast in Queensland this week, actually. It's sunny and hot, but it's pretty windy, let me tell you. So a little croaky in the voice because I swallowed too much seawater yesterday. So these things happen when you finally have a break. But, there's no break in the housing market at the moment, that's for sure, Rachel. As you so rightly pointed out, onwards and upwards and upwards and upwards. It's a very strong season. We've had strong housing market activity for the last couple of months, really, and continuing on as we would expect in the spring selling season, where everybody's becoming a lot more focused on buying and selling before the end of the year. That's why it's such a strong period. And also we get more of the higher priced properties into the marketplace. Now we've got the mid-winter break behind us. So, it's getting a little blasé about how, every week is strong and other high clearance rates, but, you've got to be informed, and that's what we're all about here. Of course, Rachel is giving the best information that's available in terms of particularly decision-making in property. And we've been doing this for years and years and years, and it's all continuing on in terms of high levels of credibility. So other than trying to punch through my croaky voice, seawater affected voice, I think we should get started. My housing market, of course, every week, Rachel, we bring the wide world, the Infinity and Wilson Weekly podcast. We bring this from My Housing Market in conjunction with the good folks at Infinity. We've been doing this, as I said, for some years now. Thank you out there. We get good ratings and good coverage. So we are all about informing the marketplace out there, informing buyers and sellers about what's actually happening in the housing market. We know, Rachel, that we get a lot of clickbait out there, a lot of nonsense. That's when, the topic of the housing market is raised. But this is a no clickbait zone here, of course, and we're all about evidence-based insights into the housing market. So My Housing Market is my brand, and every week we bring you all the latest data, not just the headline data, rents, prices, etc., but also the background data in terms of what's happening in the economy, which of course is important for housing market activity, particularly in relation to interest rates. And we've got some interesting insights in terms of what's happening in interest rates, which we've been discussing in recent weeks. Won't discuss that so much today, but there is some important data coming out the next week or two. So let's get started. Let's stop the rambling on, Rachel, and let's find out what's been happening this week in property. So onwards we go. So it is the week ending Wednesday, September the 10th. It's the second week of spring, Rachel. So everybody should be shaking off the winter woes, the cold, the sleet, the snow. Well, not so much the snow, but certainly all the doom and gloom of the cold weather is, fingers crossed, behind us. And we'll soon be complaining about how hot it is, but that's life, isn't it? So this week we're going to look at the latest rental data, which is quite interesting, Rachel. August rental data. August, of course, is a holiday month, essentially. So we do get reduced demand in rental properties, particularly not so much generally in terms of general holidays, but particularly the student market. Now, we've had some significant shifts in student market activity, not just we have to account for the end of the semester, beginning of the new semester, depending on which institution you're at, in August, but also changes to government policy in terms of the intake of students. And that's not surprisingly, Rachel, having an effect on the rental market. So we'll have a look at that. We're also going to look at the latest regional house prices. We talk a lot here about capital city markets. We get a lot of requests for what's happening in the regions, and every month we try to bring the latest regional house price data. A little earlier this month, which is good. So we'll see how the major regions are tracking. And as usual, as you've alluded to, Rachel, already, we're going to look at the latest auction results. Of course, auction results are really important, and we give a lot of focus there. We're actually going to update some of our reporting on the auction market, start to look at perhaps some of the top suburbs, auction suburbs, over a monthly period in each of the capital cities, which will be quite interesting. But that's down the track some way. But the auction market gives us a real insight as to what's happening here and now in terms of the general housing market. So that's why we look at it every week. It's a great snapshot into real-time activity, and we're all about here and now in terms of our insights. So let's get started, Rachel. Home rental markets ease. Rental market's been interesting, Rachel. The big picture is that over the past few years, we've seen a remarkable upward drive in terms of demand for rental properties. A couple of factors behind that. Finally, the underbuilding has sort of caught up with us. The credit squeeze on investors caught up with us, so we had less supply coming through. And of course, we had remarkable demand as we ended the lockdown period. We opened up our borders and we saw a surge, particularly from students, into our rental market. So it wasn't just students, but we also saw a big shift in demand out of the southern states into Queensland, particularly southeast Queensland, through the COVID lockdown period. And that sort of got the ball rolling in terms of higher rents. And we really saw an explosion of rents over a 2-year period. Over the last year, nearly a year, we've actually seen that remarkable rental growth easing. No surprise, because we couldn't continue to sustain 20% plus rent rises on an annual basis. Just can't afford that. And this is part of the reason why we've seen an easing in rental growth, is because of the affordability barriers that have been created through this very strong rental growth. But we have some other factors as well. As I mentioned, the reduction in the immigration intake, and also some seasonal effects as well recently. So home rental markets are easing. And when we look at the data in some depth, Rachel, we can see it's actually the unit data, particularly some of the smaller markets, which softened over August. So let's have the big picture is that generally we reported capital city rental markets easing over August, higher vacancy rates and rental growth more or less lower overall. Rental markets reported easing conditions, and that reflects that continued sharp reduction in demand, seasonal factors, reduced numbers of students, particularly for units, of course. But nonetheless, our vacancy rates, particularly for houses, Rachel, still remain very low. So there's still plenty of competition amongst prospective tenants for available properties, and eventually that is going to put upward pressure on rents. So, it's a hiatus at the moment in that sense, but as vacancy rates remain low, there's still long queues outside most open homes for rental properties. And that means, eventually we will see higher rents. But at the moment, at least, we've got some relief, not so much from the actual rentals, because they're still quite high in a relative sense because of all that growth, but in the growth coming through, So some better news for tenants, but, still a very challenging market if you're trying to secure a rental property. So let's have a look at the data for houses. Sydney's still the most expensive capital city to rent a house, with a median asking rent steady at $800 a week. Melbourne down slightly, 0.4%, $588 a week. Brisbane, Adelaide and Perth, similar results there. Perth at $700 a week now, median asking rents, steady over the month. And just slight rises or slight falls there in Hobart and Canberra, and Darwin, similar to Perth, and Sydney rents were flat. over the year, still quite solid rises for most capital cities. Brisbane up 4.7% for house rents over the year. Perth up 5.3%. Hobart up 6.4%. Darwin up 4.2%. But Rachel, I think the really interesting statistic here is the actual vacancy rates. Now, given those seasonal effects, which we've discussed, we did see an upward shift, which we expect in August through that holiday period with reduced demand. But even though we did see an upward shift in vacancy rates, the vacancy rates are still really, really low. I mean, the rule of thumb always in terms of vacancy rates is once we get to 2%, it's sort of a balanced position between higher and lower rents. When we see vacancy rates rising above 2%, we typically see reductions in rents because that means there's more properties available for more properties available for tenants, prospective tenants. But when we move below 1% or below 2%, we typically see higher rents because there's fewer properties available, so more competition amongst tenants pushes rents up. But as you can see here, most capital cities are still tracking below 1%, which is very, very tight levels. And it's been the last 2 or 3 years has certainly been a period of unprecedented low vacancy rates, or at or below 1%. And these, most of these capitals that have the below 1% vacancy rates really are showing that there's a shortage of houses to rent, and even the capitals which have above 1% vacancy rates, they're just above 1%, Rachel. Melbourne 1.4%, and Sydney 1.2%. So these are vacancy rates that are telling us that there's still a significant shortage of houses to rent in our capital city markets, and I would expect to see those vacancy rates actually start to tighten again once we move into the full spring season and demand starts to pick up. So houses sort of situation normal, a little bit of holiday easing, but vacancy rates, Rachel, still very low. Lots of choices for landlords out there in terms of prospective tenants for their rental properties. And as I said, I think that even though we're not seeing the sort of rental growth that we've seen in previous periods with these low vacancy rates, I think it won't be too long before we do start to see more consistent upward movement in rents for houses. So that's houses. Let's have a look at units. Sydney units, again, are the most expensive of all the capital cities. Asking rents for units in Sydney weekly is $750. They were steady. Most rentals, it's a better position really for rents for units compared to houses, where we had Sydney, Melbourne, Brisbane and Perth, where unit rents were steady over the month. Hobart up 1.5%, volatile Darwin up 7.1%, in Canberra, the only capital to go backwards, 3.4%. Again, similar results over the year for unit growth for rents for units. Brisbane up 4.8%. That Brisbane unit market, excuse me, not just for renting, but also for buying, continues to have significant upward movement, up 4.8% over the year. Brisbane unit rents, Adelaide up 6%, Perth up 7.4%, and Hobart up 17%. Hobart, Perth and Adelaide particularly, and Darwin are small unit markets, so you tend to get volatile results from period to period because there's not a lot of actual turnover happening in terms of the rental markets for units. Now, we can see, similar to houses, the vacancy rates for units all eased over August compared to September. And interestingly enough, the vacancy rates are higher for units compared to houses, Rachel. But mainly the high levels of vacancy rates are in those small unit rental markets, Adelaide, Perth and Hobart, which have certainly significantly higher vacancy rates. But again, they only have small numbers in their rental markets for units, so we can see some volatility there. Melbourne eased a little bit with up at 2%, but you've got to remember the vacancy rate for units for Melbourne has tracked at plus 2% for some time, and it has moved down quite sharply over recent months. And I think this is just as I said, a nominal adjustment through through that holiday period. Sydney's still tight for rentals, 1.1% for units. Brisbane reasonably tight at 1.9%. As I said, Sydney was 1.1%, and Darwin just 0.5%, perhaps indicating why we've seen that strong growth over the month. And also Canberra with a relatively low vacancy rate of 1.5%. So it's really those smaller capital cities, Rachel, that have pulled the or that have recorded significant easing in vacancy rates. So we'll watch what happens over the next month to see if we would get what would I expect to be an adjustment downwards in vacancy rates. But the big capitals are still recording tight vacancy rates. And as we said in regard to houses, Rachel, I think the portents are still here for higher rents given the shortage of rental properties coming through.
So what you're telling me, Doc, is landlords have nothing to worry about. We have seen that rental growth cool off a little bit, but it has been triggered by just that seasonal blip.
Yeah, I think that the big picture is we've seen a flattening of rental growth, Rachel, which was given the crazy levels of growth that we have had was somewhat expected, but we've also had a significant restriction on demand with the change to government policy. We had a remarkable cut in the number of international students being allowed into Australia. And the government was quite clear that they were concerned that there wasn't the resources, the infrastructure for the high levels of migration, particularly students and particularly the rental market, and this has obviously had an effect because, we were talking tens, maybe hundreds of thousands of fewer students coming into the market, which, it's not great news for universities. But it has offered more balance in the rental market going forward. But the big picture is really we still have tight vacancy rates. We're still underbuilding. And as far as landlords, I think landlords also are in a position now where they can really look for a quality tenant, because there's still so much demand for available properties that, and I think landlords are doing that. They're looking for the quality tenant, which they always do, of course. But when you've got a bigger pool of potential tenants for your rental property, it does give you the opportunity to be a little bit more selective, perhaps, or for your agent to be more selective in terms of, the longer term tenancy that you secure. But of course, we shouldn't be crying too much for our landlords, Rachel, because they'd all be really enjoying some good capital growth at the moment,
Oh, absolutely.
And I think all of our unit markets are recording very strong growth. I mean, all we have to do is look at that Brisbane market, which has increased. Median unit prices in Brisbane have increased by nearly 50% over the past 2 years. And
you're about to tell us the regions as well. So I'm excited for the next data you're about to present.
Yeah, so it's not, seriously, we're not, sort of a poor old landlord, but they would be certainly very happy about the strength of housing markets at the moment and the capital growth that's, being accrued. And of course, the other good thing for landlords, Rachel, in terms of yields, is that, yes, even though yields are falling because prices are rising and rents are steady, right? You get me? Landlords would be pretty happy by and large with 3 interest rate reductions this year,
Yeah, that's another thing.
Their balance sheet would be looking pretty good in terms of stable rents and significantly higher prices and significantly lower interest rates by and large, and perhaps with the prospect of more to come, but that's another story. So, I think it's still very much a landlord's market, Rachel, in terms of Australia's rental markets, despite that typical holiday easing. So shall we look at our next lot of slides? I think you've already given it away. If you're looking for the rent report, the full rent report, there it is. There's a QR code there. You can scan that, and that will give you a link to a PDF copy of the My Housing Market August 25 rent report. So let's have a look at the top regional markets for August. So hot off the press, latest data for our top regional markets. We do this every month when we can fit it into the show. And as I said before, it's a positive exercise for those wanting to understand more than just what's happening in the capital cities, but looking at the regional market. So what we do here is we look at the top local government areas in each of the states. So these are the top areas in terms of the number of people who live there. So these are population based, the top 10. And then we look at the annual growth for the top 10 over the month for house prices and rank them from high to low. So New South Wales, it's interesting, Rachel, that the more affordable local government areas, Wagga and Albury, continue to record strong growth. Medians just above $600,000 in those two LGAs, but strong growth over the past year. Newcastle, of course, a significant regional area, just I guess still in the loop of the Sydney of the Sydney orbit per se. Although certainly a legitimate regional area. 11% growth, $1 million median at the moment in Newcastle. We've seen some a rise in Maitland, of course, in the Hunter Valley there, adjacent to Newcastle, and I think that's taking advantage of that broad Newcastle area, Hunter Valley area increase in demand. And also those northern New South Wales regions adjacent to the very strong Gold Coast market, Tweed, Ballina, strong growth there. Certainly well over $1 million medians in those areas. Wollongong, of course, which is more or less a suburb of Sydney, also strong growth. I think it's interesting that when we look at the results here, Rachel, the regional markets tend to follow what's happening in the local capital city. It's like it's an energy source, not in real time, perhaps a little bit of lagged effects, but you can see there when we put all the major capital city results there, the major LGA, local government area results there, maybe we average them out, they average out just about what the Sydney result has been over the past year. So very similar results, but of course local factors determine the differences in what happens on at that local level, local government area level. But certainly some interesting results there. When we compare that, and this is I guess it tells the story. It's interesting that when we've been looking at these regional results, we can see the differences between each of the states. And up until recently, that Melbourne market has basically all its major regions, local government areas, have been in negative territory. But this is the first time in some time we've actually now reporting that most of the local government areas in Victoria are now back in the black. And of course, we've been talking and revealing that the Melbourne housing market has picked up. It's revived, strong auction results, and prices are now growing again in the Melbourne market. And it's interesting that the regions are following that pattern. As I said, it's been, as you know, Rachel, some time before we've seen such consistent growth in the Victorian local government areas. Again, it's reflecting that revival in the Melbourne market. And of course, a lot of this is driven by lower interest rates. Similar to New South Wales, the more affordable areas in Victoria, local government areas, are producing the best results. Affordability is driving, and with lower interest rates, driving more demand in those areas. And it's the higher priced areas that are still dragging the chain, Rachel, still underperforming. The Surf Coast is a very strong prestige market just outside Melbourne Metro, down by 1.9%. Macedon Ranges, which is just outside to the north of Melbourne, also underperforming as well. Although we're starting to see some signs of prestige markets improving, with the Mornington Peninsula, which is again an adjacent prestige market to Melbourne, up by 5.5%. So certainly this is, I guess the model is that the regions follow what's happening in the capitals, and we're seeing that quite clearly in Victoria with a revival there in the local government area, similar to what we're seeing in Melbourne. Queensland, well, hey, here we go, and this really does reflect what that energy source of that Queensland market, right up the eastern seaboard. All the local government areas in Queensland are recording very strong growth, with the exception there of Noosa Heads, where I am at the moment. But Noosa's had a very strong last couple of years, so I guess it's having a bit of a break at the moment, but not so much all the rest. Every other major local government area, Rachel, in Queensland is recording double-figure growth over the past year. And some of the recent underperformers, Mackay, 23% increase. Townsville, which was doing nothing for years, which did nothing for years, is certainly making up for lost time, 21.5% growth in Townsville, and starting to close in at long last on Cairns, which has been miles ahead of Townsville for a couple of years. But as I said, that's now starting to readjust itself. As usual, the Gold Coast, 11% increase, just keeps on keeping on. Sunshine Coast, similarly, 11% increase. Toowoomba, which is, has really been a very consistent performer, that Toowoomba market, Rachel. Good growth there, nearly 20% growth over the past year. So again, it reflects what we know is happening in Brisbane, southeast Queensland, but it's really spreading its way all the way up the coast. And we've been seeing this for quite some time, that Queensland market is certainly a very hot market indeed in terms of prices growth. Tasmania also now starting to record, its region starting to record, local government areas starting to record more consistent and higher growth. It was just Hobart recently, and that's the Hobart local government area, not the Hobart capital city area. But some good growth there, particularly Launceston, 5.7% over the year, Glenorchy up 8%. And we know Darwin's back in town, strong growth in the Darwin housing market, and the Darwin local government areas, Darwin actual local government area up 15.7%, Palmerston up 14.3%. And the interesting thing here is that Palmerston has been typically outperforming Darwin in terms of prices growth until recently. And now we've seen the Darwin market, the Darwin local government area market, outperforming Palmerston. So plenty of good news for Darwin property owners, but who have really had a tough time over recent years for various reasons in terms of prices growth. So starting to pick up. So I think that's always interesting to look at what's happening at the local level, Rachel, because a lot of our viewers, a lot of our listeners, of course, are interested in about where they live, and not just the capital city focus, but also the regional focus. And I think we've covered that pretty well there for most of the states. We don't look at Adelaide or Perth because they don't have significant local government areas in terms of size. So the data tends to be very volatile. So there's not a lot you can get out of it unless you pick up a large data set, and that means going back, maybe a year or more, and then it becomes a little irrelevant in terms of what's happening here and now in the housing market. So that's what's happening in the regions. Finish off as usual with the latest auction results, weekly auction results. We are into the spring selling season. We had the first week of the spring selling season now. That's at last week's results. And impressive results, strong results reported by all the capitals over the past week. So we can unequivocally say, Rachel, that we've had strong results in every capital city auction market to start the spring selling season. So not unexpected. We've had a very strong winter, lower interest rates, confidence is high, and we're starting to maybe see some early signs of FOMO coming into our markets, that fear of missing out energy, which is particularly significant in terms of potential prices growth. And this is likely to come over coming weeks as well, of course, but we will see more listings coming into the market, and that's the energy of the spring selling season. More sellers, but of course most sellers are buyers and buyers are sellers, so that it will likely continue the trend going forward, but we will look out for that. So Sydney 966 auctions last week, a little bit lower than the week before, but the clearance rate was higher, just under 80%. Sydney's been teasing us, Rachel, with near 80% clearance rates for most of the past month. In fact, we had a couple of 80% over the past 2 months. So we got to wait for some consistency with 80% plus clearance rates, and then we will start talking about a booming housing market. We're just about there, but we'll wait and see to get a bit more consistency on 80% plus. Well ahead of where it was the same week last year. The Sydney market, 71.9 versus 79.7 this year. Melbourne auction numbers a little higher again. 1076 auctions in Melbourne last week, up from 1022. Another mid-70s, very consistent, robust Melbourne auction market results, 74.4%, a little bit lower than the 75.3% the week before, but continuing to track around about 10% higher than the same time last year. And that's, again, validating the revival we're seeing in prices growth in terms of the changes in what's happening in the auction market. Big result in the Brisbane market. This is a very strong result for Brisbane, 66.3% clearance rate, higher listing numbers. It's starting to give a bit of a sense of some, even though that Brisbane market is very impressive in terms of prices growth and activity, we typically see auction clearance rates in the 40s to 50s in Brisbane. Has a different auction culture compared to the other capitals. But once we start seeing 60s and 70s in the Brisbane market, we can expect to see considerable prices growth coming through, and well ahead of where it was last year in terms of clearance rates, the Brisbane market. Adelaide, again, just under 80%. That Adelaide market has re-strengthened and is now performing at the levels we expected from it, given how strong it was last year. But of course, it sort of tracked backwards, given very high prices growth, creating those affordability barriers. But Canberra has also been maybe the surprise packet to some degree recently, because Canberra has been sort of trundling along in the 50s in terms of clearance rates, but it's had some good, strong results recently, and another strong result at the weekend, 73, or over the past week, at 73.2%. So each one of the capital cities, Rachel, has recorded an unequivocally strong result. Even that Brisbane one that said, well, 66.3%, but for Brisbane, that is, almost an 80% result if we translated that to the other capital city auction cultures. So across the board, a very strong start to the spring selling season. And we await with bated breath what happens next week, right, going forward. So this is the trends just quickly. They're all the same, dipping down towards the end of last year, and then from the beginning of those interest rate cuts in February, up and up and up. So you could just about say every trend is the same. That's the Sydney trend. Now, obviously, to the first week of September, these are the monthly clearance rates, 79, just under 80%. Melbourne, same sort of story there, up and up from April. And even though that was a holiday month for Melbourne, which is typically a weaker result there, but certainly same sort of energy there. Rising with those lower interest rates. The Brisbane market, massive result there over the first week of September. We need to see if that carries on, but at the same rising level of clearance rates following lower interest rates. Same for Adelaide and the same for Canberra. The Canberra market is even more pronounced, the growth that we've had since those cuts to interest rates in Canberra. Clearance rates really onwards and upwards consistently from each month from the cut in interest rates when it started to take effect in March and April. So if you're looking for the latest auction results, you can get them on my LinkedIn site, Doc Andrew Wilson at LinkedIn, every Saturday night at around about 6 o'clock. And then the full national report, which includes the regional breakdowns for Sydney and Melbourne, as well as the top 10 sales under the hammer for each of the capital cities over the previous week at my LinkedIn channel around about 9 o'clock on Sunday mornings for the national report. And if you missed the latest national report, there is a QR code which will give you a PDF copy, a link to a PDF copy of the latest national weekly auction market report. So just before we sign off, let's give away some tremendous information here, Rachel. The best giveaway in housing. It's the My Housing Market Infinity housing market suburb data app. So we've spoken about capital cities, we've spoken about regions today too. Let's talk about suburbs. So if you want to know what's happening in each suburb in Australia in a real-time environment, updated in real time, this is the app for you. What this does is it tracks asking prices and asking rents as they're coming through. So you get to review what agents, what vendors, what sellers are pitching for their property values, as well as for their rents as well. So if you want to get a copy of this, there is a link and a QR code which you can scan to get a copy of the app. Great little app. You can put it on your phone, put it on your desktop. Fantastic. So you can be up to date with all the housing market activity, all the data for suburbs at your disposal. You have to get a password, of course. This is password protected from the good folks at Infinity that will just be so happy to give you that password. So get that link, get the password, and this is what you get. This is a screenshot for what we're looking at here. You can filter it for price or rent. You can filter it for the capital city region or the outside capital city region. Here we're looking at the Sydney region of New South Wales. We're looking at suburb. Selecting our suburb is Blacktown. You can filter for house unit or townhouse, and also the number of beds. And this is the result we get for a 4-bedroom house in Blacktown. Not just the median asking price. So this is what the market's asking for a property for a 4-bedder in Blacktown, a house, but also the low and the high. So you know the boundaries about which the market's operating, the midpoint, the high point, and the low point, and the number of properties that are for sale. And you do exactly the same thing for the rental market. So it doesn't get any better than that if you're looking for, and as I said, this is updated consistently, and it covers every suburb in Australia, Rachel, every single suburb that has data. Of course, if it hasn't got any data, it's not there. So that's the story. And as well, for our investors, we also track the top 10 yielding suburbs in each of those major regions, capital city region, outside capital city region. So you can see what the return on investment is. It's the gross return, gross yield. So it's the annualized rent against the current asking price. And that gives you that return on investment, and also gives you the vacancy rate, current vacancy rate, number of properties for rent, and number of properties for sale. So this is allows you to, I guess, take a scientific approach to your property analysis. And if you don't know where these suburbs are, the hot links there, you can click on the hot links and they will take you to a map of the suburbs. So you can have fun just tracking your way around Australia, seeing where all these suburbs are. But it's certainly a great little resource, the app. So get hold of that, get onto Infinity. They'll give you the password to it. Biggest giveaway in housing, I think that is, Rachel.
I agree.
Next week, latest house building costs. A few surprises there. And we're also going to look at something different, Rachel. How much does a block of land cost in the capital cities if you want to build a house on it? And how's that going? Is it harder or easier? Is it more expensive or less expensive to buy a block of land to build a house on in our capital cities? And how does that all compare? Is it a good investment perhaps to look for building blocks to get in, and of course, is it all about, I mean, at the end of the day, that's the bottom line when we're talking about an undersupplied housing market. It all starts with the land, doesn't it? Before you even consider a building approval, you have to have the land. So we're going to look at that. That's very interesting. I'm sure you'll all be looking forward to that. And as usual, the latest weekly auction results. So if you missed anything today, scan the QR code there. You'll get a copy of the full presentation. So that's about it, Rachel. My voice is a little croaky. That salt water, it's just murder. How do you stop swallowing salt water when you have I don't know. We'll come up with that.
Well, I'll give you a break because, Doc, I've still got stars in my eyes about those region price points, median price points. We've got Toowoomba, the Garden City, clocking at 16.8% growth, and the Gold Coast 11.3%. That's well above. Yeah, that's well above the national average, and we're seeing the strength of the northern New South Wales regions as well, with Ballina and Tweed continuing.
That's very interesting, isn't it?
Yeah,
we've known that Byron Bay has been a prestige local government area, smaller local government area. That's why it's not in there. But and we've been we see multi-million-dollar sales in Byron Bay. So that's a sort of a standalone prestige market. But the energy that's coming out of the Gold Coast is now pushing up the Tweed and pushing up Ballina to be significantly higher than $1 million for the median. So that's what you've got to come up in the midpoint if you're wanting to purchase in Ballina or the Tweed. Now, the Tweed, of course, is right next to the Gold Coast. So, whatever. But Ballina is still down somewhat, and yet the energy is sort of capturing the Ballina market, and, well over $1 million now, the median price in Ballina. So as we saw what's happening with the Queensland local government areas, that sort of energy is picking up the northern New South Wales local government areas as well. That is a remarkable.
Are we seeing those regions become Australia's next prestige regional markets up to the Gold Coast?
Well, this is the point. It's because perhaps buyers are being pushed out of Byron Bay, and it's the old bridesmaid environment, that they're looking for adjacent areas. Now, you can understand the Tweed because that is next to the Gold Coast, which has seen remarkable growth in the last few years. But Ballin is now, I guess, becoming the next port of call for prestige property, because, of course, it is adjacent to Byron Bay. And, we're seeing the results there. So it's almost as though you could include those northern New South Wales local government areas as part of the Queensland energy, part of the Brisbane, which we've seen all the way up to Cairns. It's be pretty happy if you're a homeowner in those northern New South Wales local government areas, just as you would be if you, as you are on the Gold Coast, which has had remarkable growth and continuing remarkable growth. That's the point. There's really no slowdown in that southeast Queensland market, and we're getting lower interest rates, which is just the icing on the cake.
Yeah, awesome. Well, thanks, Doc. That's a wrap on this week's Wilson Weekly. Faster than a Melbourne auctioneer, but just as full of drama. Big thanks to Dr. Andrew Wilson for the insights. I'm Rachael Howlett, your finance strategist, reminding you in property, knowledge isn't just power, it is profit. We'll catch you next week.
Thanks, Rachel.
Wow, that was good.
Oh, my throat.
You're fucking gone. See ya.